Today, I'm going to show you exactly how my dividend portfolio stands up against the basic index funds and what I can teach you about this. So we're going to head over to my computer and I'm going to show you a few charts. So let's jump right into this. Welcome back, passive income investors. Today, before I break down this chart and exactly what it means, I want to flash back a year ago when we saw the S&P 500 index crash to all-time lows, when the bears were out and alive thinking it was the end of time for the S&P index, guys. If you don't know what this is, it's the 500 largest companies in the U.S. and pretty much makes up the U.S. economy, or it lets you know how the U.S. economy is generally overall doing. Now, last time this crash happened, it was mainly because Trump was talking about tariffs. And if you don't know what the tariff war is, guys, well, essentially, Trump's tired of Chinese people ripping U.S. patents and companies off. So he's threatening raising the tariffs on like $300 billion worth of products from 10% 25%. Oh my goodness. It's crazy because this caused the market to drop in the last few days here, guys. This volatility we see over the last few days has because Trump has opened his mouth. But we have to remember the last time this happened, there was so much going on in the economy that everyone thought we were heading into a bear market or somewhat of a recession. And we can see this big decline was probably set off by like digital trading or essentially robots, because there's a lot of robots in the markets these days. There's a lot of stop losses that got hit here. And then all of a sudden we saw this massive recovery. And we've been hearing that a lot of investors, especially financial firms and things of that nature, have been getting really frustrated because they can't predict the market. There's a lot of good news coming out, and then all of a sudden Trump opens his mouth and we see this, which again should, if it represents the past, should start bringing the market down. And this is in the morning of this news a day ago, guys. So who knows? Maybe we're going to see another correction in the market where we're going to head on a bit of a downturn from here. Who knows? I don't. But I want to show you dividend portfolio and how it compares to the S&P index and the basic overall indices, including here in Canada. Now, many of you probably have seen my accounts. These are my accounts as of today. My performance, essentially, if we scroll up a little bit, I am up roughly 8 to 10% in both of these accounts. This is my newest account, guys, where I just started funneling money into this account this year, a little bit from last year. I bought Tesla last year, but it's slowly coming back. A lot of these businesses have been doing very well since I've been buying them because I was buying most of them on this massive dip. But these are the two accounts that I currently hold, guys. This is my tax-free savings account, which is looking really juicy since Apple's had a nice tear up lately, but it's been pulling back based on these tariff wars. And SO, I don't know what it is with SO right now. I need to do a deep dive into this one because it's been doing incredibly well, and it's been holding all-time highs and currently trying to break new all-time highs since I've been buying it. So I'm pretty impressed with the performance of this guy overall. But let's jump into what you are here for, the bread and butter of this conversation. That is my charting against the S&P and the overall indexes, guys. So not only do we have the S&P, but we have the S&P TSX, which essentially is the Toronto Stock Exchange version, so the Canadian version of the S&P. And this blue line is the original investment account, the account that I started in September of 2014, all the way till now of April of 2019. So that's essentially an entire 5 years, guys, that I have been in the market, that these accounts have physically existed. And as we compare them, because my TFSA has only started, it's this yellow line here, but it only started in early June or July of 2017, and it has severely outperformed the market in the short term, but the S&P is slowly catching up to it. But my other account, the smaller account, because it's been around for a lot longer, and you can see it's stagnated for a couple years, almost a year and a half, just because I took that money into my TFSA, and then once I maxed my TFSA, I started refunneling money into that account. Now, you got to remember, this does not include dividend payments either. This is just the growth in equity on my stocks here, guys. So even though this account stagnated for a year and a half, it's still outperformed the overall market and has actually continued to quite substantially outperform it. I've actually almost doubled the money in that account. That account, as we can see, if you look up at the top left corner here, guys, is up almost 100%, which means the money that has been through it has almost doubled, not including dividends. And my TFSA is 67.74% return, which is really beating the basic index by quite a lot, including the S&P TSX composite, which has been doing horribly lately, more or less because we've had a lot of oil issues, carbon tax. There's just the Canadian economy has been doing real rough over the last 5 years. If we look at the same 5 years over the Canadian dollar, we have lost a substantial amount. And this is something that does not get included in this chart, which kind of bothers me because essentially on all my Canadian assets, which makes up, I think 40-ish% of my portfolio, I would have lost a massive amount on just on the Canadian dollar dip. So I'd actually have to divide this out and see how much I lost in global purchasing power and actually compare that against the market, because that would bring, if I'm being truly honest here, that would probably bring my entire performance down quite a bit to probably just above. I'm going to say I'd actually have to run the math on this. I would presume if I knock that down, it would bring me closer to performing equal to, if not slightly better than the overall market. Definitely better than the Canadian market, but compared to the US market, I might be getting a little closer to this S&P index line here. Now, this chart is really nice. If you guys don't know, this is Scotia iTrade. I'm not promoting it. It's just something that I've used because it's my bank here in Canada, and it also gives you all these other really fun things you can compare your chart against. So let's compare it against something else. Let's turn off S&P 500 and the TSX component. Let's just go against the Russell 200 growth index. Let's go against the world index, and maybe because you gold bugs out there, it's kind of nice that they put this. So I love the fact that they allow you to do this, because here we are opening up a whole new world of understanding. So the Russell 200 growth 2000 growth index, guys, I have been severely outperforming. We're also looking at Acra Gold Bugs index on the New York Stock Exchange, and you can see how gold has severely underperformed most of the markets in general, guys, which I think is something that should be talked about, because people have been, again, I recently did a video on Robert Kiyosaki and of course Peter Schiff, these people that are always talking about the next recession or depression and why you should own gold. But this is a good reason about why I don't like owning gold. And even against the world index, guys, it's kind of impressive to see my overall performance here, which is quite incredible. And again, this is still before dividends. If you threw dividends in here, this chart would look a lot different, and I'm sure the S&P would look a little different as well if we could see the dividend rate of return. It's also really nice to see that we can actually see the percentage change overall, so we can see the exact percentages. If we highlight over here, we can actually see up here the exact percentage change as well, which is really incredible. And it's kind of neat to see that even down here back in the early days, that there must have been some kind of slowdown in the market, because I had a massive dip, but it looks like the overall markets were dipping around that time as well. Now, I want to challenge you, dividend investors, to show me your charts against the S&P 500 index. You can leave a link in the description below. I love watching all you YouTubers that do post your videos, and I can't say thanks enough to all the new subscribers. If you guys enjoy this content, remember to slap a like, consider subscribing. I am not a financial institution. I cannot give you legal investment advice, but because of that, I'm allowed to pretty much say whatever I want, just presuming that you're not going to take my advice seriously, and this is for entertainment value. But it's nice to see that a nobody like me that lives in his mother's basement doing magic shows can compete against some of the best investors out there, and have a rate of return over a long period of time that is equal to or better than these guys in suits with big firms in fancy offices. You don't need that. I'm sitting in my bed right now at home making money off this, and you could be doing the exact same. And you have to remember, guys, this doesn't happen overnight. As we can see, this blue line back here, we can see that I didn't make money for over a year almost, guys. So from what do we got here? So literally from September of 2014 to about literally September of 2016, almost a solid year and a bit, I didn't make a dime off investing. I lost money. My portfolio was horrible, and I had to learn. It was a big learning curve, but at least I was outperforming gold in that same time period, which was kind of hilarious, really, if we look at gold. It hasn't done much. But anyways, I hope you guys enjoyed this video. Again, consider subscribing if you enjoy this stuff, guys. I really appreciate it. We crossed over 200 subs. I want to do live streams. I mentioned this in the past, but I can't right now because YouTube won't allow me to until I reach some benchmarks, I guess. But anyways, it's been an early morning. I look forward to seeing the markets open with all this crazy news, and I wish you all the best of luck in your financial freedom journey. Talk to you tomorrow, guys.